Good afternoon, traders. This is Tony D from the easyMarkets dealing room in Sydney. The market's volatility is back. Overnight, we've seen the US stock market reverse sharply after the FOMC minutes highlighted some of the Fed's increasing agreement that inflation is returning to the 2% target at a faster pace than previously expected. This is read by the market as opening up the door to rate hikes more than 3 this year, and does allow US dollar to continue its rebound, because 4 rate hikes versus 3 in the current market is enough, with the market looking for reasons to continue this US dollar trend, to accelerate it. Now also the US dollar is getting a bid here from the selling in the stock market. Now the stocks are affected by rising expectations of rate hikes because it will hurt their bottom line if it costs more to repay the bondholders, and just generally stocks in general. If bonds and other investments are getting a high yield, they become a little bit less attractive. So stock markets are under pressure, and while we haven't seen the dramatic falls that we saw a couple of weeks ago, still fairly heavy. It has fallen a good 600 pips in the Dow in the last 4 hours. So yeah, the market is potentially going to be testing the downside again. How this plays out is that the US dollar gets stronger more quickly against some of the risk-sensitive currencies. So the Aussie dollar back at that 78 level. Now 77.75 is the 200-day moving average, so we're getting pretty close to that. And also the well-known 77.50 support, which the market has bounced off in the past and had so much resistance in 2016, 2017, is now the big support on the way down. So there's a couple of areas here where we can find support and perhaps bounce again. But you know, we're having this deja vu feeling because the market actually held and bounced off this support already only 2 weeks ago. So the second time down is a much bigger test and a much bigger ask for the market to hold. If it does hold, then it is a bigger double bottom. You know, you can talk about the market testing it twice and holding, but broadly speaking, if you're looking at what happens when the market tests these levels, you can see that there'll be less first-time buyers at the level. So, you know, if you're sitting here waiting, it's probably best to wait and see if we do hold before re-engaging longs. And if it does break, be open to the idea of the US dollar getting stronger, and it's a new trend, and that it can have some room to move, because the US dollar, if you look at the dollar index, is coming off multi-year lows, and just a normal correction off those multi-year lows does open up another 200 or 300 points on most pairs. So the euro dollar, we're talking 120, the pound 137, 135. Potentially, if the Brexit headlines get a little bit more mixed. Now on the point of what's going on with the pound, all the good data with the strong CPI and the Bank of England talking about raising rates, and the preferred access to the EU market document that was swirled around, is not enough to keep the pound well supported here, because the US dollar is so strong. And also there is a lot of uncertainty as to exactly how the Brexit negotiations are going to proceed from here. So while there's uncertainty, the bears do have the upper hand. But if we do get more good news, then perhaps the pound will be able to hold some of its rally. It definitely hasn't been able to hold the rally in the last week, that's for sure. So we are back at the 138 level. And below that we got that 139 level, and below that we have the 138 level from last week that held multiple attempts. So that's the next key level you want to be looking at. In terms of what's coming up for the UK today, though, you do have the May and her top ministers all going to be in a meeting today to try and hammer out their approach to how they want to see access for the UK over the next 2 years in the transition period. So it's an important little meeting that they're holding, and so we should have news from that meeting come late tomorrow from the UK. So that's going to be early Friday for the traders, and if we get good positive news and some progress there, then you could see the market definitely react more positively. But keep your mind open that if there is no progress on this front, then that's another negative and another bit of uncertainty that can drag the pound lower. Alright guys, so interesting trading things going on here. In terms of the crosses, that's where it's a bit safer because you get away from the from the US dollar movement. You are seeing some interesting levels on Euro Yen, Pound Yen, Aussie Yen, back towards those supports. Aussie Kiwi is at multi-month lows, and so it's getting back towards the key 105 level, which is if you've been trading the Aussie Kiwi in the last few years, you know that 105 has sort of been a magnet that's held nearly every attempt, and while we have gone underneath it a couple of times, it is a really big level that the market has been paying attention to in the past. Alright guys, best of luck. If you do want to have a bigger chat, come through on the contact below, and you can ask for your personal dealer. If you're not a member of the easyMarkets dealing room, please sign up below as well, and we can talk to you about your trading needs and wants.